Good morning, it's Mike here, and it is Tuesday, the 11th of February. Um, what I wanted to do for two reasons. One is because it's the most important chapter of the Code of Trade. Two, also just a refresher so it becomes very important to you too. This is the most important chapter of the Code of Trade, and the reason is if you are going to lose all your savings, it's because of your risk management. So to continue, I'm not going to go through the disclaimer again. We are all adults. We all know that we make our own decisions. So I'm not going to go through this again, and you can reread it yourself if you wish to. I'm only going to go through what I feel is very, very important and relevant. Now, I know we talked about how big the marketplace is for trading Forex. And what that means is there's always going to be a setup for a trade and to take profit. We are never ever going to move the market. So we only surf the waves. We only surf the waves with the big players to get in the market and out and take our profits. So if you remember, I kept drumming into everyone that being liquid and in cash is king. You never want a position left open going with a very big negative, because the chances are the market's very cruel and it just takes some big waves and that's it. You are out of the game. And you do not want to be out of the game. You want to stay in the game. So if the market's a 6.6 trillion a day market, and big players are using what we learn. So part of the code to trade, the majority of the market uses exactly the same. So what does this mean? So for me, the market is very predictable and it's a constant opportunity to earn profits. And the reason is after you learn the code to trade and you understand it and you're going through it where it's second nature to you, if you're doing what many traders around the world are doing, you're getting in and out of the market at similar times. So this creates these very predictable and respected support and resistances. So the most important part of risk management is not to be greedy. Very, very tempting to be greedy. Certainly at the beginning, it's tempting to be greedy because you can see the profit you can earn if you become a good trader. You can see it's very profitable. It just takes something to go the wrong way, then that's it. You're in a scary, scary situation. So when you open a trade, only use the lowest leverage. So if you remember what leverage is. So if you're going for a 300 to 1 leverage on a 10,000 account, you're actually trading 3 million. So yeah, your profits are much higher, but your losses are also going to be a lot higher. So choose only a low leverage. I prefer 50 to 1, so you're only trading a 500 account. So yeah, the profit may be a little bit lower, but most importantly, it's less risk of losing your savings. And that's what's important. You do not want to be losing your savings. So this is another very, very, very big warning. Do not trade large lots. So just use this as a guide of what to trade. So if you remember a lot, I'll just come out of the actual presentation. A lot is over here. And this is the position you're going to place in your trade. And this is giving you an indication of where that position is, or what you're going to earn per pip if you place a position this size. So how do you do that on a chart? So if you look on a chart, you come to the top. I apologize for the crazy dogs outside. I hope you can still hear me. And you just choose for the size of the account that you are trading, you choose the correct lot size. Remember, never be greedy. It's about staying in the game, small profits, getting in and out, and cash is king. So don't forget to use this as a guide and to keep yourself safe. So I'll just get past this again. So we understand the broker charges. Once you begin trading, I don't really look at this much because each trade I go for, it is to be profitable and it's to take profit. So I understand there's going to be charges. The swap is the important one, but I do try to be in and out the market within a couple of hours or a couple of days. And we can cover that in the next video. So if you remember, the swap is an interest that is charged to your account or taken off to your account depending on how long you leave the position open. So warning for positions being left open for a long time, and I would advise against it. I'll do another video on getting in and out the market quickly and what to look for. And then that means you don't have to worry about the swap. Always place a take profit. So once you've decided on your trade, and always set a take profit. So once your price target has been reached, you automatically bank your profit and then you become 100% liquid. And remember, being liquid and in cash is king. So to summarize, risk management is about using the least percent of your actual account to make a trade. So you're not risking your entire account. So it means to prepare in advance, analyze the charts in advance. So when you place your trade and you know that the price may go up and it may go down, you're never risking more than 0.5% to 3% maximum of your account in any one trade, and never any more. If you're going to do that, you're risking your account, you're going to lose money. Always set the take profit for your target price. And never ever be greedy with your profit. As long as it's between 0.5%, 3%, be happy. Get in, get out of the market. So these were just examples that I made. You can look at this yourself, but it all adds up. This is the point of what I was getting at, and I think I did a very kind of conservative example. If all you made was 0.5% per trade, only 0.5%, and you traded 5 days a week, now this is 2.5% return a week. Even a bank account doesn't return that in a year. And actually you're talking about a week, which is 10% a month. So by week 2, you're now already trading and risking only your profit, not your actual savings. So it's just taking your time and just making sure you're keeping safe and you're just in and out the market. So to close this chapter, while learning the code of trade, only practice on the demo account until you know you're trading it perfectly all of the time. So when you go on a live account, you stick to it. You don't change your mentality or nothing like that. You just stick to the code. So when you view the chart and recognize a trade that excites you, you only begin to achieve high profit to ratio, meaning that you have a high percentage of your trades that make profit with a low percentage of losses that lose you profit. Personally, I do not like to lose money. I take my time. I'm a cautious trader. I'm a defensive trader. I only place trades that actually count and I'm going to make profit. So only then begin trading real money once your winning trades are I would say above 90%. And then even talk to me before you start going live. Let me see your trades. Let me listen to how you place your trades. If you want just like a second opinion, are you really ready? And this is just to keep you safe. I do not want you losing money. So stay disciplined, stay focused, and always follow the code. And never forget, do not be greedy. It is about making steady profit on each trade, then being back in cash. As being liquid and cash is king. So that's the end of this video. I just wanted it to be an emphasis on the most important chapter. I also wanted to be a refresher for anyone else that has been on the masterclass, and just to remember the most important chapter is risk management. Thank you for watching. If you found this useful, please give me a thumbs up. Leave any comments if you want. Any questions, don't hesitate. Have a great day. The next video is going to be what to look for before you place the trade. Look forward to catching you then. Bye for now.